Before we run you through the market action, let's tell you our three guests who will be joining in on the show. Atul Suri, trader, will be joining in. We have Ashwini Gujral, fund manager at ashwinigujral.com, and Neeraj Diwan, director at Quantum Security. Let's get in their top market opinion. Neeraj, I'll start off with you. We have seen that there has been volatility fairly inherent in the markets, but the FIIs have still been continuing to put in money into the equity markets. Is this trend likely to continue even ahead of that crucial FOMC meet?
Yeah, good evening. I think now, after seeing such a good rally, which no one could have dreamt of, the kind of rally we saw, I think there has to be some pause, and people will take call on whether these levels, large caps, are all the more attractive as they were 1 week back or not, because the rally in 1 week has been pretty strong. So I feel some pause and some consolidation needs to happen in these levels. I think now people will wait for FOMC meeting minutes and even our Fed meeting to take a call for our large cap outperformance going ahead. I think the focus will shift more on stock specific mid cap ideas now, where I think the returns in the next 1 week or 10 days can be better than the large cap space as such.
Ashwini, characterize the market action for us. Do you think we've hit some kind of a pause button, or we've hit a reversal pattern?
Well, let's first be clear that let's not get into fresh bull market and breaking out of the range, etc. We will remain in this 5,000, 6,000 band, give or take 100, 150 points. That's always possible. So now what will happen is that the momentum will correct, and chances are post the event you could have one more high getting created, maybe even 6,000 plus. And from there, I would expect that market tops out in the intermediate level. And again, we have, correction on the downside, going back closer to 5,000, 5,200. So this 5,000, 6,000 band will continue unless something changes in a big way where, there is a structural issues start getting solved. That may or may not be easy, but overall short covering rally, it will be difficult to get 200 points from here.
Atul, what is your sense? September has been a tricky and a volatile month. First we saw a crack, then we saw a smart reversal, but the price action has been very volatile on both sides of the range.
Well, I think that the current fall that took us to 5,100 has, I think, broken the back of a long 1.5 year kind of bull market that we had. Because what I feel is the market has made a lower bottom, which it had done around 5,500 or thereabouts, and went to 5,100. We've had this very sharp pullback. As I said, it is global. And of course, India seems to have got its act better thanks to a new RBI governor, his statements, etc., whatever there is. And we are at 5,900. I feel that for us the important area would be around 6093. 6093, why? Because it has been a major top earlier. And in case we are able to take that out, we would really go out and make a higher top, which I think would be very important, or the first step to a revival or kind of a return to the bull phase that it is. Otherwise, it just stands as this whole rally would just then, if that level doesn't get taken out, I think it will just stand as nothing but a short covering rally. And if you look at the way the markets are, the components, the stocks that are moving, you will realize that the big money that is there, or the big moves that is there, are really in the short spaces, stocks that are really short. First it was your private sector banks, PSU banks, capital goods, some of the PSU stocks also. So these are the stocks that are really beaten down, and that's why you see very high percentage gain. The leaders that there were earlier, in the earlier rally, barring IT, you don't see very big moves in FMCG or pharma in terms of percentage wise. So I would say that at the moment we are in a short covering rally. Beyond 6093, in which case we make a higher top, I think that could be a point where one could have a trend reversal and the start of another bull market, which I still feel has been broken by the fall below 5050. So at the moment, I think it's a short covering rally, but keep my fingers crossed and hope that it surprises us beyond 6093.
Neeraj, what's your assessment of the IIP numbers this time around? We're expecting a contraction of just about 0.2%.
Yeah, I think we will still see some contraction there. So I think I am not too gung-ho about the numbers. But I think the whatever factors, whatever steps have been taken, which will happen only, the benefit will happen only with the lag. So I'm not really too hopeful of the numbers. So I think I'll keep my fingers crossed that there should not be a major disappointment as such. But I'm not too gung-ho on the numbers.
Let's find out what individual stocks could do tomorrow. Ashwini, what's your call on the Bank Nifty, and would you be looking to buy into any of the names?
Well, Bank Nifty basically is also going through a pause, and it's possible that even that has another leg to this, which takes it up to 10,000, 650, 700. Again, easy money is over. Now it is basically chopping and changing. In the morning it will be red, evening, suddenly buying will come up and it will go 150 points higher. Banks are weaker than the rest of the market. So idea should be, if you have to go long from here, you should go long on the IT index, which has corrected, and also the rupee, which is weakening, should help that out. Then the Nifty and then the Bank Nifty. So the Bank Nifty, the best part of the rally is probably over.
Neeraj, on declines now, would you buy metals or would you like to load more IT? Because they both will benefit because of rupee. One will benefit because of the export-oriented nature, which is IT. The other will benefit because of the import substitution trade.
Yeah, I think I will wait for some more time to adding position in IT. I think there we've seen a good run. The prices have also really gone up a lot. So valuation-wise, though, if you make a case for a 1 year, 2 year forward based on US recovery, definitely they still look attractive to me. But I think in the short to medium term, I'll still wait a little bit more and see how the trade pans out there. I'm expecting some more correction to happen in IT before I can make a case to buy an IT stock. But metals definitely, I think even after the China data, and even, because to make a case for an import substitution, I think metal would be a better bet on dips, but definitely on dips, because there also we see a good rally. Stocks like Tata Steel were just going one way up. So I would wait for some dip. I'll see some dip in the market and then go for metal stock first, and then IT maybe after a little while before some more correction takes place.
Atul, highlight for us, what is it that you own within the IT basket?
It's always been the lifetime highs have always been darlings, and the way some of the IT stocks are doing, I see there is no reason why one should not be in them. Not only have they done